Welcome everyone to another webinar of Park Launch. Today, a question which everyone has been thinking about, but nobody seems to know the exact answer, and we will try to answer that a little bit as well, is what exactly is happening in terms of investments, quantum investments, size of investments, not only in Pakistan, but in the larger region in which Pakistan exists. Today we have a special guest, Philippe, who's basically the founder of MAGNiTT, probably the largest data aggregator provider for venture funding in the MENAPT region, which means Middle East, North Africa, Pakistan, Turkey. And I understand Philippe is very much working towards expanding into Africa on top. So welcome, Philippe.
Thank you.
Quick introduction about myself. So myself, Salman, I'm a director in the M&A team of BNP Paribas for Middle East and Africa. I focus on consumer retail tech within the region and have special interest on venture investments and funding. So over to you, Philippe. I think the topic for today really is, first of all, you obviously have a view, an overview, a view of what's happening across the region in terms of funding, scale of investment, size of investments, sectors of focus. And I guess you started off with the GCC initially, and then you expanded into more Middle East, and then from there to Turkey and Pakistan, and now you're looking at Africa as well. And I'm sure you're looking at when you look at the data that you're collecting, and you over the years you're looking at trends and things that are happening, right? So I think for us the important thing would be, I think, as our audience to understand, first of all, what's happening across the region, and then maybe once we go through that bit, maybe in the later part we can go more towards how do the trends fit with what's happening in Pakistan or not. So over to you, Philippe.
Thank you. I mean, thank you very much for having me. And I appreciate Ali giving me the invitation and being able to participate. I think at a really high level, we're seeing a massive resurgence in venture capital globally. I mean, it's not even just the emerging markets. When you look at the markets of the US, the European markets, in terms of capital deployment into venture capital and startups is at record highs. And recently I was listening to a fascinating podcast, which I recommend, All in VC, and they were talking about not only is it record high of capital deployment, but it's also a record high in terms of liquidity events, which is successful for investors because they're seeing more exits and acquisitions happening at a global level. That trend has also kind of resonated with the activity that we're covering. So MAGNiTT as a data platform, as you mentioned, is now covering Africa, Middle East, Pakistan, and Turkey. And as we continue to expand, our niche is into the quickly growing, what we call emerging venture markets, not emerging markets, because many of them are established economies, but the venture capital space across that. And really, last year was a year of two halves, a very strong beginning of the year in COVID, which was the ripple effects of 2019, and then a big slowdown of activity into the second half of 2020. This year, you've really seen an explosion in investment activities where people have gone from a risk-off approach into a much more risk-on approach in venture capital, with records amount of capital being deployed in all of the geographies that we're tracking, whether it be Turkey, Pakistan, the Middle East, and North Africa. And I prepared a couple of slides. If you would like me to jump into those, I'm happy to share those and happy to answer any questions as we kind of go along. So
I think we have about, half an hour. You can sort of take us through what you see, and then I think we'll go more into interactive Q&A with the audience.
Yeah, perfect. So, basically at a high level, like I said, we're covering all of these geographies, and just some high level numbers that put it into context. When you look at the growth that we've seen already this year, the top number, and this is year to date. I'm always very particular on caveating this. So year to date, Q3 is the first 9 months, albeit we're now entering into November, but all of this research was the 9 months of this year. And as you can see, the total amount of capital that's being deployed has been at record highs in all of the geographies that we're tracking, whether it be Middle East, Africa, Turkey, or Pakistan, albeit that the number of investments differs a little bit by geography. One trend we've specifically seen in the Middle East is a drop-off in activity at very early stage. nearly a 30% drop in investments of companies that have raised amounts between $0 to $500,000. In my opinion, one piece that I've written about is a drop in accelerator programs, whereby people have been able to engage a lot less offline in those type of programs, which is a big conduit to growth of early stage startups. But now we're beginning to see the reemergence of the likes of your Techstars, your Plug and Plays, your 500 startups, and that trend likely to continue to year end. When we see what that means at a MENAPT level, record amount of capital. Turkey has been a standout year driven by mega deals in companies like Getir, which did 3 rounds of investment alone. Having spoken to many investors in the Turkish ecosystem, that's predominantly been driven by a lot of FDI investment and a lack of investment over many years in the ecosystem, which is now seeing a reemergence, an explosion in the ecosystem. And yet the total number of transactions across all of these geographies is slightly lower than the year-to-date amount of 2020. It's already surpassed in total capital. And you see this kind of continual trend. I mean, obviously Pakistan is still emerging and is at the bottom there, but in many geographies seeing a slight pickup into 2021. And in fact, in Pakistan, each of the last couple of quarters have either been consistent or growing in terms of activity. When you actually kind of deep dive, the trend has been 3 to 4 quarterly increases in capital. So that point I was making about the COVID effect, I think in COVID of last year, many of the VCs were holding back cash, trying to support their portfolio companies, really trying to understand how best they can support their founders, opportunistically investing in companies that were able to kind of capitalize and increase demand of their products. But as we know in the region, and we've done kind of the analysis, it takes between 9 to 12 months to close an investment round. So much of the investment activity that we're seeing in the last 2 quarters are probably deals that started happening in the tail end of last year, and the capital is now being announced and deployed into the ecosystems of each of those. At a regional level, again, for Pakistan, we'll deep dive into a second, but at a regional level, I think it's interesting to see for Pakistan, not only was it a record quarter in Q3 by total capital, it was a record by total number of transactions. In that small little graphic you see on the left-hand side, year over year, over 250% increase in funding compared to the same quarter last year, 20% increase in deals, and even Q3 versus Q2 saw significant increase. In fact, I saw a statistic somewhere that said the total amount of capital in the Pakistani ecosystem year to date is the same as almost the last 4 or 5 years put together. So really positive signs for the Pakistani ecosystem. And we're seeing that reverberate in a lot of the conversations that we're seeing here in the Middle East, in Africa, in the emerging market space. Customers of ours are not only MENA-based, but international tech companies, governments, corporates that are really interested in what's happening in the emerging market space. And I think that's an extremely positive trend that we can probably discuss in more details afterwards. When we rank the countries, and effectively these are the countries that we're currently mapping, as of next year, we'll also include all of sub-Saharan Africa, where you're seeing tremendous activity in the likes of Nigeria, Kenya, even South Africa. When we look at the countries in MENAPT, currently, Turkey is seeing, as I mentioned, a real standout year in terms of investment activity, but Pakistan now ranks 5th when compared to some of the other countries, including Egypt, UAE, and Saudi Arabia. The UAE, the only geography in the ones that we currently track that saw a decrease in the number of transactions in the first 9 months of the year. And in terms of capital deployment, again, Pakistan coming in 5th relative to the other geographies. But when you see the percentage increase, when you remove Turkey, that really saw some big mega deals, which we categorize as more than $100 million of investment, basically is coming out as the biggest increase year over year in terms of capital deployment compared to other geographies. The MENA region has its own kind of trends that we're seeing, the big 3 ecosystems being the UAE, Egypt, and Saudi Arabia. But if you looked at just the MENA region, for instance, and took UAE, Egypt, and Saudi Arabia back 2 years ago only had about $50 million of investment. So even there, government initiatives, interest from corporates, interest from venture capital is leveling the playing field within the region, but across all of the geographies, as I mentioned, Pakistan coming in fifth. And we look at a couple of other things in terms of concentration of capital. So those larger deals here we're categorizing as the 5 largest investments as a proportion of the total capital that's being deployed. The MENA region is still relatively well diversified, with 60% coming from the tail end of investments. As I mentioned, Turkey heavily skewed, close to 85% of all investments coming from 5 big deals that have happened in the ecosystem, and Pakistan healthily with a 62 to 38% ratio of the 5 biggest deals, which we're all very familiar with, accounting for the lion's share of capital deployment within the Pakistani ecosystem. Another trend that we look at specifically is the impact of international investors. In the MENA region, it has historically been local investors fueling local startups. Having said that, from a MENA level, it's the highest number, 276, individual funding institutions that have made investments in MENA-based companies. And yet 38% of those have come from outside the MENA region, the highest percentage we have seen on record. Turkey, historically quite heavily invested by local Turkish startup, has seen appetite from international investors, specifically from European FDIs that are supporting the ecosystem there. But in the Pakistani ecosystem, while there has been growth in the number of venture capitals investing in local startups, close to 80% are international domiciled venture capital entities investing in Pakistani startups.
Sorry, Philip, when you say internationally domiciled venture entities, so let's say, a lot of the funds, even in Pakistan, even though the general partner might be based in Islamabad, Lahore, Karachi, the fund might be registered in the Cayman Islands or Singapore or the US. So would you classify that as an international domiciled entity or a local entity?
Correct. And I think that's an important point, because we're scaling into so many geographies. We need to just have a consistent methodology, and it becomes very difficult to kind of differentiate whether the GP is from one specific country or another. So what we tag is the headquarter or the location of domicile that the investor has verified on the platform. So in some cases, if they've chosen to tag themselves as Pakistan, then that would be located as a Pakistani VC. If they've chosen to headquarter in a Cayman Island or a UK or a US, it would be tagged as such. And that's consistent in all the geographies that we're basically doing analysis on. Okay. And the same for the headquarters.
Is this but this is the domicile of the GP or domicile of the fund?
The fund.
The fund, okay.
And the same with the startup, because when we look at methodologies that other platforms use, for instance, in Africa or other emerging markets, sometimes they look at founders who are Pakistani that may be living abroad. We focus on the headquarter as verified and chosen by the startup itself. So in some cases, we have challenges, for instance, in the Middle East, where an Egyptian startup may have started in Egypt and then moved to the UAE for their headquarters. If they've moved that headquarter, then that is where the investment is reflected. Now, what we're actually doing as a nuance to that is tagging each investment round at the headquarter of that investment round. So giving the example, for instance, of the Egyptian startup, some companies like an Aventus, like a Swivel, which may have done a seed or Series A round based in Egypt, we will tag that historically as an Egyptian investment round. Once they've headquartered in another geography, or a company like Trucker, which was a UAE-based company that then moved their headquarters to Saudi Arabia, we will look to, as we improve the accuracy of our data, tag the investment round on the headquarter of the investment at the point of investment.
Understood. Thank you for clarifying.
And here we're looking at the accelerator, non-accelerator. I think this is actually one of those, not red flags, but it was definitely a red flag for the MENA region. Historically, if you went back 2 years, close to 40% of all investment activity was coming from accelerator-based programs. Now, those are important where there is a lack of an angel community. And in the MENA region, we have seen that angel investment hasn't taken off in the same way as it has in the US or Europe. When we see that dropping, it can cause some concern for potential deal flow moving forwards, because obviously it's a great conduit to growth of early stage startups. And you can see consistently across all of these different geographies that the percentage that is attributed to accelerator-based programs is still relatively low. And while that isn't necessarily a huge cause for concern, it is something to pay attention for, as well as being an opportunity. Here in the region, you see the likes of 500 startups, Techstars, Plug and Play, government-sponsored accelerator programs really supporting that early stage. But in nascent ecosystems, they do play an integral part to the growth of the ecosystem itself. And again, you're seeing active investors across the board growing their activity, specifically in the type of investments that are happening in this space. And some of the active investors here highlighting the growth year over year. But again, the interest in the ecosystem and the number of institutions that have made investments, specifically in Pakistan, is extremely positive to see the interest. And what I find quite interesting when I look at the Pakistani ecosystem is the amount of Southeast Asian investors who are specifically interested in Pakistan, more so than we have seen in the MENA region or North Africa. And I think that's an extremely positive trend. One of the things that we would like to try and hope that comes out of MAGNiTT reporting from multiple regions is that international investors don't get skewed to one specific geography, but see this more as an emerging market opportunity when they're looking at startups, and can help those companies grow beyond those borders and silos that we have historically seen, specifically in the MENA region, but also in other geographies, including Turkey, as they continue to grow and mature. And all of this drives into much of the research and information that we're publishing on a regular basis that's available on the platform. I don't know if there's any specific slides you would like me to jump to or speak to.
So I think one question for you. So obviously it seems that across the board you have increased interest across the region for investments, and the size and scale of investments has gone up across the board. Perhaps apart from the Middle East, where I think the increase in activity is somewhat lower than maybe Turkey or Pakistan, or in comparison. Do you think it's just a function of the amount of liquidity that we have today out there, or is it because these markets have somewhat matured and are now attracting more capital just because you have more interesting companies coming up? So
I think that in general, I think the MENA region as well saw considerable growth. If you look at the Q2 chart here at the bottom, Q2 was a standout quarter, the highest on record. We're seeing the likes of SoftBank coming into the region. So when I look at the MENA region specifically, for instance, governments are fueling the ecosystem through funds of funds. And that has been a key driver to really enabling the enablers, who are the VCs, in deploying the capital into this space. The second is that the international interest that I mentioned is extremely positive, because it's showing that these startups are beginning to compete with the international startups and the return on investment that is potentially there for the investors in that space. The third is that international startups are also looking to acquire and invest in local companies to gain a geographical footprint in the region. And that's extremely positive. And number four is that corporates are now playing a key role in investing in this space. I think specifically the likes of your Majid Al-Futaims, your Shalhoub groups, your larger players are seeing opportunities downstream and either investing or acquiring companies in that space. And I think that's extremely positive. When you look at Turkey, it's quite interesting that the massive investments have gone into predominantly transport and logistics of companies that have dominated the Turkish market and are looking to expand into Western Europe, as well as the gaming industry. So you even see industry-specific trends of investment as people look to capitalize some of the growth of the ecosystem. But I think it's a global trend of appetite into venture capital. I think it's a reckoning that there is an opportunity in emerging markets that shouldn't be missed. And it is a natural progression of the maturity and growth of the ecosystems that is fueling this growth.
Interesting. So Philip, you've been tracking the development of the ecosystem, particularly in the Middle East, for a number of years. And In your view, what do you think is similar with obviously the trends you see now developing in Pakistan, and what you feel is sort of somewhat different? Would be great to have your perspective on that.
So I think when you look at it purely from an industry perspective, what we've seen across all of the emerging spaces is that in the technology-enabled space, infrastructure is the first industry or space to get disrupted. So when you look at transport and logistics, when you look at e-commerce, which in many ways I believe is a transport play, because yes, it's providing choice, but it's ultimately getting the goods and products to the homes of the people that are purchasing those goods. Those are the type of companies that see rapid growth. Venture capitalists understand that model. They understand the unit economics, and the size of the opportunities is clear to see in effectively a broken infrastructure ecosystem, especially when you look at the Middle East, for instance, where when you look at the population numbers, that's an interesting differentiator and opportunity. Pakistan has close to, and please correct me if I'm wrong, 220 million people in the country. When you look at Egypt, it's 100 million. But when you look at Saudi Arabia, which is considered a large market, it's only 30 million. And you go to the UAE, it's 10 million. And yet when you look at the Middle East, it's 350, broken down by different demographics, different geographies, different bureaucratic and legal frameworks. And herein lies the challenge as well as the opportunity. Whereas in Pakistan, with a size of 220 million, Turkey being 100 million, it's almost that they can become somewhat self-sufficient as a geography for the first port of call. So what we look at in the MENA region is you cannot be country only startup focused. You need to be regional, if not globally focused. In some of the geographies like Pakistan, you can almost be self-sufficient in a way that you can get to scale and capture a market without needing to look out of those borders. Having said that, that creates an interesting opportunity as well. So I mentioned to you separately, I've just come from the FII conference in Saudi Arabia and the GITEX conference that was taking place here in the UAE. Speaking to many of our users and clients and people engaging in this space, they're fascinated by the opportunity that exists in Pakistan. And yet many of the companies are doing very similar things to companies they've invested in the region. And for them, that's an opportunity, whether it's for scalability, because ultimately venture capital is a scale game and you need to be able to capture as many markets as possible, whether it's a talent acquisition opportunity, or it's a synergistic opportunity for growth of those markets. And it goes back to the point that I was saying, the more awareness that we have of the different markets, the more the opportunity is for creating a single emerging venture market that people can then scale into. The challenge has been historically, how do you go about doing this? I always tell a small tale. I was in Turkey 2 years ago, invited by the Ministry of Commerce, and they were trying to understand what the opportunity for Turkey and the Middle East was. And we threw out a tweet with a colleague there who got a response of about 350 people. And the question was, why is it that Turkish startups don't scale to the Middle East? And the responses ranked from lowest to being language barrier, whether it was politics, whether it was historical culture, or the fourth answer, which got 70% of the responses, was effectively, we have not been shown the way, which was the literal translation, i.e. we have not seen those success stories happen. And part of that is because inherently founders get a little bit shy going into the unknown and are a lot more familiar with the markets that they are aware of. And yet when you see the likes of your Kareems and many other companies using talent in one market, the opportunity of scaling into the other, I think you are beginning to see those synergies across Pakistan and the Middle East. And that opportunity is really presenting itself.
It's interesting you bring up those two examples because, I mean, if you look at the recent, I would say, unicorns in the region, or I would say the large exits that we've seen till date, they are almost exclusively regional plays. So whether it's Kareem in operating across with three biggest markets being Saudi Arabia, Egypt, and Pakistan, or Swivel, which again has Egypt, Pakistan, and I believe it was third was an African market. So essentially, both of them have had very large regional plays. And then you have the big classifieds businesses like EPG, for example, which have Beirut and Beit and Zameen and so on and so forth. And then these are all regional plays in a way. Which brings me sort of to the other question. I mean, we see some liquidity events, with these big exits till date. A lot of it over the years, especially in the Middle East, has been just obviously round after round after round, but we have not seen much in terms of liquidity events. So what do you see? What are the, what trends do you see happening in that space? Perhaps, maybe something we have not covered much because we have not only been looking at the big events, but have there been smaller liquidity events for some of these founders in some of these more developed markets?
So speaking about the Middle East, I just looked in Pakistan. I think that the last exit was about 4 or 5 years ago, and yet this year there's been 2 M&A kind of activities that have happened already. In the Middle East, 2019 was a record year with close to 35 different exits. Now, traditionally, acqui-hire or merger or acquisition, we're getting close to that level this year. I think that, again, you need to look at the history. Really, venture capital as an instrument, as an asset class, has only been around for about 8 years in the MENA region. And yet we know that it takes on average 7 to 9 years for a company to successfully exit for a value that is valuable to the founders. So I think an element of patience needs to kick in before we start seeing more of these activities happening. Having said that, we're beginning to see more interesting instruments or more exotic instruments being used. You've already seen 2 examples of SPACs of both Anghami and Swivel that have happened here in the region. There has been rumors of IPOs now being listed at a local level in Saudi Arabia. I think that there are ambitions for further growth, but we know that to get to those levels, you need scale, you need strong founding teams, you need good unit economics, you need good investment to be able to capture those markets. All of those are the fundamentals of what needs to happen to potentially see more of those type of acquisitions or exit events, liquidity events. What we have seen is that the challenge of the region is an opportunity for founders who have localized international products, made it very relevant to the regional marketplace, which has meant that they've been able to compete. You look at the Kareem story, being able to compete with the similar product in a local market. You look at the acquisition of Amazon, Ksuk by Amazon, the same thing, a classifieds website, but basically laying the foundations for the e-commerce site to then be acquired by Amazon. And I think that that will continue to be a trend until we see companies look to expand beyond the region. I think that point of scalability and unit economics will be key to see bigger IPOs of companies on international markets. But I think the obsession of unicorns is one that I'm always somewhat allergic to. I think if we just see more successful 100, 200, $500 million exits, and everyone talking about now that the Kareem Mafia effect of the number of, I think that there's 35 funded startups that have been management or team members of Kareem that have
Really,
then gone on to
was with
exactly
Kareem, one of the Kareem founders, senior team members, day before yesterday, and he said last count we had 112 startups start with Kareem founders inside them. So across the region.
And so the more $500, $200 million exited startups, the more you have educated founders or experienced founders, shall we say, who can then go on to build their own companies. That will be the next evolution of all of the ecosystems. And again, lest we not forget, we've gone through a pandemic where people were unable to travel, people were unable to necessarily, although it was making cross-border activity somewhat easier using technology at the same time, ultimately, you do need to enter these different type of markets to get to that scale. Now that travel is happening, now that people are looking at new markets as opportunities, I think it'll be a couple of years before you see that real acceleration of exit liquidities, but I think that that's in the coming years to come that we'll see.
So I guess what you're saying really is that the sector has not been there long enough for us to see a lot of those liquidity events till now, but obviously they're coming. And with some of the liquidity events, you will also have the stories which are more negative stories as well. And I think now failures are also coming because obviously after some point, either you will go up or you will go down. and you will have
Yep.
the likes of Fetcher, for example, which is a story which is in the press at the moment, and others will come.
And I think that's also, I mean, albeit not healthy, but there's a lot of learning lessons that need to come from all of these stories. And I think that's one area that, especially I can speak to the MENA region. I'm not an expert in Pakistan. I'm still educating myself in what's happening there. And thanks to these kind of forums, I'm really learning a lot. But one thing that we shy away from in the MENA region is discussing failures. We're very quick to applaud and celebrate success stories and how they happen. But I think that there is, as the ecosystem continues to mature, a requirement at all levels, whether it's founders and or investors or governments, to really take stock and learn of why it is that certain companies were unable to get to the point of success, and what can be done to either support them, or if that is also part of the natural evolution of the ecosystem, that you're going to have companies that don't necessarily succeed in that space.
Yeah, we have a question regarding, I think, the cross-border story, because I think that's a theme that we are picking up here, right? So the basic premise being that the Middle East itself being a subscale market in terms of demographics, you need to expand to neighboring larger markets to scale up. In a way, whether it's Egypt, whether it's Turkey, whether it's Pakistan, you need some of these large markets to go big. And recent sort of history shows that. Now, while what the trend we see, I think, generally is that for Turkish startups, a lot of time, what they've been doing is they've actually not been growing into this region. And I think you touched upon some of the reasons why that was so, but they've been expanding a lot more in Western Europe, for example. Politics aside, I mean, if you take out the politics factor, Middle East, fine, you can understand the last couple of years has been a bit tough between Turkey and this region. But they've also not been expanding to Pakistan, I think, for example. But apart from it, I believe a recent startup I saw, which, for example, was a used car business, which has now raised money to expand into both Turkey and Pakistan simultaneously. But do you see trends of Turkish startup founders now looking at the larger region beyond Europe, let's say Middle East or Pakistan? Or is
I
that,
do.
or Egypt?
I do see that. I mean, if you talk specifically about Turkish startups, I know that, for instance, the general counsel here is someone that I speak to regularly, and there's huge efforts being done to kind of promote the UAE and the MENA region. Now, all of these different geographies are beginning to realize we need to do a landing program. We need to be able to support these companies to set up. We need to be able to support them in understanding the framework of the geography, whether it's the tax, the legal, the regulatory, as well as their ability to hire talent. So, for instance, I'm a big fan of the work that the Collabs guys are doing in Pakistan. But one question I often get is, where do I go to if I'm interested in going to Pakistan? How easy is it for me to set up an entity? How easy is it to get talent? And who's the best headhunter for me to go out and do that? I think Atif recently put out a post, who's the best headhunters in the Pakistani ecosystem. That really goes to the point of the tweet that I mentioned, is that if you don't have answers to those questions, your natural reaction is to go where the information flow is a lot richer and easier, where some of those questions can be answered. So in the Turkish space, there is strong ties to Europe. There are strong allegiances from that perspective. So that show me the way example is a lot easier. Those barriers, whether it's the GITEX conferences, the FII conferences, the different kind of tech conferences that are taking place, always have entities that are looking to support in operationally setting up. I think one important thing to note is, if you want to be successful in any market, you do need to hire locally. You can't just import talent. So if you wanted to operate in Pakistan, you would look to find local talent that would be able to support you from that perspective, at least have a key leader in that space that can help the growth. And that's probably one of the biggest challenges for companies, is to help identify that, which is why many look for investment from a lead investor in that specific market to help with opening doors, which is why venture capital is very much not just about capital, but it's also about the right venture capitalists that can help you in the growth and journey of the company itself. But to the question that you asked, we're definitely seeing the synergies, and I can speak specifically from Saudi Arabia. Many of the government entities who are clients of ours and the VCs that we're speaking to are fascinated about the work that's being done in Pakistan, how they can support companies into scaling into that market, what the challenges are, and how best that they can make that work, both from supporting companies going there, but most importantly, it's not just one way. How can they support Pakistani companies who are receiving funding and growing, entering the market here to be successful as well?
And I think, and obviously we have some examples of some of this flow already happening. So you have the guys like Retalio, for example, which started off in Saudi Arabia with Pakistani entrepreneurs, now covering both Saudi Arabia, Pakistan, and then you have obviously a bunch of other startups which are going the reverse. In terms of the, and I think this is more about, I guess, linked to the evolution, maturity of the ecosystem itself. Do you feel that the market today has a balance between investors and founders in terms of how they're sort of agreeing on their economics? Because typically when early stage markets, what you have is, you have sort of often unbalanced arrangements between investors and founders. And often, it takes a bit of time before that gets balanced out. Do you see that the market has sort of matured in the region overall to have that balance in place?
I personally believe that there's still a mismatch between the demand and supply for capital. And I mean that at every stage. I think that there is more capital that's being invested in the ecosystems than we've ever seen before. But there are more founders. There are more founders seeking funds. There are more founders that are needing to scale and achieve these success stories. There is some dry powder that continues to be deployed into this space. But I think that there's opportunity for further stimulus from a government perspective. I think that the private markets being able to really unlock and make it attractive for angel investors to fuel early stage. I think one thing that the Middle East saw, which wasn't necessarily a good thing, but happened because it was a requirement, was that venture capitalists were acting like angel investors, fueling early stage startups because angels were not doing that. And really VC should come at a slightly later stage. But when you look at programs that are done in the UK to incentivize angel investors, the European Union, Singapore as examples, where there is capital guarantees or tax incentives, whether it's corporate tax or income tax backing for making those investments, you can really spur on the ability for those very early stage tickets of 50, 100, 200K investment rounds to fuel the ecosystem so that venture capitalists really focus on their specific stage. But also it's to try and encourage by really seeing more success stories to have international players come in and support growth stage capital, which always remains a bit of a challenge because with all of the VCs that exist, for them, they're still trying to work out the return on investment. They need to justify the funds. I mean, if you speak to the MENA region, many have yet to see the full vintage of any fund that may have been set up to 10 years ago. They have some success stories, they have some failures, but many of those companies are still getting to a liquidity event. Yet international VCs who have track records of 40, 50 years begin to get a bit more attracted to the region and play specifically at the later stage, I think is extremely healthy. So to answer your question, while these numbers that I'm showing you all here are extremely positive for the region, they do pale in significance to Latin America, they pale in significance to Southeast Asia or Eastern Europe and definitely the US. But again, let's call apples and apples and not apples and pears, that you can't compare the two ecosystems, but there is still opportunity in the space.
Which leads me to my next question in a way. So we're obviously early stage in the region, some slightly ahead than others, but relatively early stage of the industry. For nascent markets like Pakistan, which if you compare them with, let's say, more developed markets in the in the region or even outside the region in like Eastern Europe, LATAM, what should we be doing to improve this trajectory for this development of this ecosystem? What are the pitfalls we should avoid? What are the key lessons out there for us as we develop this Pakistan ecosystem?
Well, I'll caveat that by saying I don't think it's for me to say what you guys should be doing. I think you're doing an awesome job already. And I can only kind of benchmark against activity that I've seen. I think from a government perspective, I always say that the government's role is not necessarily to fuel investment, but to make it as cost effective and easy for startups to be able to set up. Most importantly, for startups to be able to fail so that you have serial entrepreneurs that are incentivized to restart again. And I think that really for all governments, there's an opportunity there to really break down the barriers and the cost of setting up companies so that they're de-risked. The second is to really understand the legal framework. One of the biggest interesting insights that I've picked up from big name international investors who have shied away beyond just the geopolitics, and I speak specifically for the MENA region, is the legal frameworks within each of the geographies. How easy is it for them to be shareholders? What are the potential bankruptcy law implications that companies have for being personally liable? For instance, they're restructuring bankruptcy law in the UAE and other geographies across the region, because you become personally liable as an investor in a company. While you cannot directly necessarily influence how a company operates, but that liability really makes people sensitive to making that investment. Hence, you see the Cayman Islands, the BVIs, and the different international entities being the actual parent company of the local entity. So having clarity around that is extremely important. Another area is talent. I think any startup is genuinely only as good as the quality of the talent that they're able to acquire, that they're able to retain, that they're able to train. And while there is no doubt huge talent pools, being able to educate people on the challenges and the opportunities within a startup versus potentially a corporate or a government role. So if I can speak to the Middle East, for instance, many locals, interesting demographic that, for instance, 95% of all funded startups in the UAE are expats, not locals. And yet if you go to Egypt, 95% of the founders are likely to be local, not expats. And I assume that that's very similar to what happens in Pakistan. But when you're acquiring talent, you want the best talent. And where can you source and retain that talent? And ESOP, for instance, which isn't widely used until you get to a Series A or Series B and have the legal framework and the documentation to be able to provide that, acts as a hedge to not being able to pay as high salaries as a corporate job that is probably like to be most safe. So beyond the kind of things that I've mentioned, which are trends that we've seen, there's obviously the breaking down of silos and information and learning, but I know a huge amount is being done, like the likes of these webinars and pack launch and events. And I think that with the return of conferences, engagement is extremely key to really helping people better understand these trends day to day than relying on kind of events on ad hoc periods that take place potentially quarterly.
It's interesting that you sort of highlight some of these differences between these different markets. I think some of that obviously is driven by demographics. Egypt by nature will have vast majority of the founders being local, same for Pakistan. But the other bit is, flip side is obviously the capital coming, Egypt and Pakistan being capital deficient countries compared to, let's say, GCC, which are capital surplus countries. One would typically expect that a lot of the capital or majority of the capital coming to Egypt and Pakistan would be from outside Pakistan, these countries, and the reverse will generally be true in the GCC, which seems to bear out. Having said that, do you feel that there's a larger play here, again, perhaps driven by some of the key trends that we discussed earlier, size of the market, scale of the opportunity, that you have the likes of maybe the big American or Southeast Asian investors coming in a big way in some of these larger markets compared to maybe the UAE and Saudi Arabia, which seem to be still driven largely by domestic capital. What are your thoughts around that?
I think there's also a point of return on investment, right? A $1 can go a lot further in Egypt than it can potentially in the UAE. And you need more of that dollar to be able to acquire the talent and to grow in a country like the UAE and Saudi Arabia than you may in other geographies. So I think that the unit economics of each of those geographies certainly plays a certain element. But at the end, it goes down to, specifically in the MENA region, given the demographics that I mentioned, you need to be operating in each of these geographies. And many startups have tended that point that I mentioned, which is a challenge for us from a reporting perspective, to move headquarters to benefit from capital, to be able to get local investment, to then operate in multiple geographies. So an Egyptian startup that may have set up in Egypt, funded by local local entities in Egypt, when they get to a Series A and Series B investment stage, realize that they need to move headquarters because some of that investment is tied to location of the headquarters, and then they keep the back office, something that they say here often, that the kitchen is in one geography, the head office is another, but it's also where the money is. So from a B2B perspective, many of the headquarters of the largest institutions are based out of the UAE. So it makes natural sense to have your business development and strategic offices there, but then the technology being in another geography. So I think those are some of the trends that we've definitely seen taking place here. But also one point that we've also seen, and I think that was quite interesting coming out of FII, huge investment has been going into companies, for instance, in Saudi Arabia and the UAE, but valuations are going skyrocketing. And people are getting a little bit allergic to this increase in valuation because there is also a little bit of a mismatch in capital, where there is a flood of these fund of funds and people needing to deploy within a specific covenant period, that actually valuations have skyrocketed, and people are very worried about down rounds, and then looking for opportunities elsewhere, identifying the likes of potentially Pakistan and Egypt and Jordan and other geographies where valuations are a little bit lower, to fund companies that can then go on to scale into those other geographies with time. So I think there's the unit economics of ROI, but also valuations that is paying a driver here, especially when you're looking at international players that are looking for differentiating factors compared to US or European markets, which are far more mature, but have clear path to bigger multiples because the ecosystem, the maturity of the talent, the liquidity events are more common, but it's at a much higher valuation for them even there. So some of the trends there are definitely playing out in the region.
I think we discussed obviously one pocket in the scheme of things, which is the VC side, right? But then there is this other pocket, which is the family offices, right? And the region is sort of sprinkled with these family offices, which sometimes seem to masquerade as VC firms as well. And how do you see their role here? I mean, I'm assuming, in the US, typically it's been more sophisticated angel investors who take the lead here. Maybe perhaps it's the family offices who might be early on in some of these ventures. But what has been their role? I think, especially in the region, and if and you see that something as continuing to be very relevant as the market matures.
Look, I think as an asset class, venture capital is very new. And when you look at the state of the economy in general, stock markets are at record high. Real estate is relatively high. Fixed income is seeing some yields and support. And in a region where real estate has really been the key driver of growth for many of the family offices beyond their own businesses themselves, which are coming out of a COVID period and seeing strong emergence and growth, it has taken a while for family offices to understand what it means to be in venture capital. Having said that, what we've seen here in the region is people do not want to be missing out on the next Kareem liquidity event. They do not want to be missing out on the next Amazon. The FOMO factor has really kicked in, especially when the next generation of these family offices, who have all been educated abroad and all studied at the different type of universities, have come back and really understood the importance of technology. I think one impact of COVID, and it was obviously a horrific pandemic that we've been through, but it's really made people understand the importance of technology, especially the elderly generation that have had to now rely on food delivery and medical delivery and the likes, and the importance of technology in fueling that. And therefore, family offices have become a lot more acutely aware of venture capital being a key driver to their portfolio growth as a company. Now, the question there, which has become quite interesting, and I had some interesting conversations last week, is historically, these guys may act as LPs in VCs. Having said that, many of them are now saying, well, you know what, let's not be LPs, let's do it ourselves. And I think there's a bit of a balancing act on funding the experts versus doing it yourself. Because if you're going to do it yourself, you need the experience, and to hire the experience of people that can manage the funds with a time frame of 7 to 8 years to exit. And the question becomes, do you just invest in entities who have track records, whose job is to specialize in that space, or do it yourself? given the risks, especially as you get into later stage of investments. And the other one is just a matter of experience, is that people who have had trading mentalities in the region have made investments for large acquisitions of companies, whereas venture capital has a certain percentage ratio that makes sense for founders and the other investments in a round. And therefore, being mass acquirers of tech companies isn't necessarily the right mentality versus being strategic investors for the potential growth of those companies moving forwards. So I think that there's definitely a role for family offices that is kind of developing as the ecosystem develops as well. And there's an educational space. A lot of people talk about the need for education of founders, which I think is extremely important in getting better education of founders, and us as founders learning and being transparent of the learning lessons and the pitfalls from each other. But the same can be said for the venture capital community and the family office community, learning from each other to kind of further see maturity in the VC space.
And so I'm going to put you on the spot because we're going towards the end of the call. So in your crystal ball, because you're the guy with the trends and the data, if you look at your crystal ball today, and I ask you, Philip, predict 3 years from now, which markets are going to be the biggest markets for VC investments in the region? What will be your number 1, number 2, number 3 pick? And why?
I'm not going to give you 1, 2, 3. I'll give you top 3 without putting them in order, because I think that's going to be extremely difficult. Okay. I'm a big fan of the Pakistani ecosystem. I think that the size of the market, one point I haven't mentioned, I think that this webinar is a massive testament to it, is the Pakistani, I believe Rabil mentioned, effect of the international community really rallying around the local community in Pakistan, whether it's through investment, whether it's through education of talent, whether it's awareness. The amount of awareness that I've seen on social media that has come from the international market has made it extremely appealing as a market, as companies continue to grow and mature. And I think that really the Pakistani trajectory is one that is extremely positive. I think that given the efforts that are going into the ecosystem here in the MENA region, I think that the Saudi Arabia and the UAE markets will continue to see capital deployment as the infrastructure continues to develop. I think that when you look at the UAE, for an example, the transport links across multiple geographies and being able to bridge the East, the West, and Africa puts it in a unique position for individuals to potentially set up here and scale into becoming an emerging market play. And something we haven't touched on at all, and one of the things that, as I mentioned, Turkish startups not focusing on MENA region, Egyptian startups don't look down to South Sub-Saharan Africa, and Sub-Saharan African companies don't necessarily look to scale up to North Africa. I think that there's going to be an explosion of activity coming from the African continent as a whole, as companies continue to get investment from FDIs in European markets, international interest, and most importantly, Southeast Asian interest in Africa will continue to spur on growth of the African continent, which currently is still growing at a high rate. So without putting specifically 1, 2, 3, I think those are the 3 kind of hubs that we will continue to see emerge across the markets.
That's a very diplomatic answer. You covered everything.
Thank you.
So I think last question. So you just came from the FI account conference. You mentioned there was interest for Pakistan, especially given valuations are on the high side now in the GCC. What kind of investors were interested in Pakistan? Anything specific you sort of caught in your discussions? What should we be thinking about on our side?
Look, I think there's 2 questions there. One is, and I think raising awareness of the activity, and I always say this, the work that we're trying to do, and I'll say that selfishly as MAGNiTT, is to really bring awareness across all of these ecosystems, right? So when we're reporting to our clients that are predominantly MENA, if not international, they may not have been aware of some of the activity that's happening in Pakistan. And where they're seeing the growth, the investment rounds, your Series B investments, the international interest in Pakistan, they're all like, well, what's going on there? And they're trying to work out who are these players, who are the VCs, who are the founders that we should be speaking to. So I think from that perspective, whatever's being done now just needs to continue to be happening, and they're going to be interested. From a government perspective, it's the question that I was saying. They want to support Pakistani companies coming into the ecosystem. I think that there's a general belief that those companies coming in can bring talent, they can bring in new concepts, people can hire locally that is a big positive for the GDP of an economy when you're hiring locally new tech talent. And I think that's extremely positive. VCs are either looking directly, you see the likes of Global Ventures, who have now made investments across MENA, Africa, Pakistan, Turkey, Sharuk, another one that's looking for opportunities in all of those markets. And what they're trying to look at is what are opportunities either to invest in directly or can complement their specific VC portfolio. Many already have startups that are doing businesses that can then be potentially merged to make that cross geography opportunity that can have a liquidity event in the future. And those companies that have already done that are continuing to look for those opportunities in that space. The last thing that I could honestly say is, and I see Omar and the work that he's doing at Collabs is really highlighting how can we enter the Pakistani market. A lot of the conversations that I've heard, albeit focused on the Pakistani founders and how best they can scale and grow, sometimes misses the trick of a MAGNiTT wanting to operate. Where do I go set up? Do I need a holding company? What type of company is it? What's the tax implications of being able to do that? Can I do that with a BVI company? Does it need to be an AGM or local company? What are the restrictions to hiring talent? What are the restrictions to office space? I think that there's an opportunity there of almost having a landing pack or a how-to guide or a reference point for companies looking to enter into the Pakistani ecosystem to see more of these companies entering. And those success stories speaking for themselves for the opportunities that exist. So to answer the question, governments are interested in supporting Pakistani VCs and startups scaling to their geographies. The second is the VCs themselves either looking for opportunities because of investment opportunities and valuation opportunities for scale and growth, or for mergers and acquisition opportunities for their portfolio companies, or founders themselves better understanding the scalable opportunity to enter the Pakistani market.
Thank you, Philip. Great speaking with you. And I think we all share the passion and the positive forecast for the ecosystem, obviously in the region in general and in Pakistan in particular. I think as a country of 22 and 20 billion people with average age of around 22, this country has a lot of years ahead of it, a bright future, a sizable future. And we hope that it does become the biggest, if not one of the biggest, the biggest story in the years to come. On our side, I think we're very hopeful as the Pakistani ecosystem community in a way, through Park Launch and our and overall, that we see this as the next big thing. For us, Pakistan is what Indonesia was a decade ago, what LATAM was 7-8 years ago, and we feel that we have a couple of things going for us which perhaps we can overall where we can help overcome our shortcomings and go well beyond what has historically been done in some of those other markets. So again, thank you everyone for your attendance, your questions, and thank you, Philip, for your insights. We look forward to engaging with you further.
Thank you very much. And I hope to come to Pakistan sometime soon and really to see the on-the-ground experience of the activity that's happening there. An open invitation to anyone. If anyone has any questions, then more than happy to reach out and see how we can support, at least from the Pakistan to MENA region. And I'd love to be able to point people towards Pakistan as well. So, and thank you, Anne, for the huge initiative that you guys are doing with Pack Launch. Very nice of you to have invited me. Thank you. I'll drop my email address in the chat for anyone that's interested.
Thank you. Please do.